What is the history of inheritance tax? Have you ever wondered how inheritance tax came to be? This tax, also known as estate tax or death duties, has a fascinating history that dates back to ancient civilizations. Rulers of those times imposed taxes on wealth transfers to strengthen their power and fund public projects. As societies evolved, so did the forms of inheritance tax, adapting to different social and economic goals. In medieval Europe, monarchs frequently used inheritance taxes to generate revenue and maintain control over land and wealth. For instance, England introduced a type of death duty in the 18th century. This eventually transformed into what we now recognize as the modern estate tax. By the 19th and 20th centuries, many countries formalized inheritance taxes as part of their financial systems. The goals included generating revenue, redistributing wealth, and limiting the concentration of wealth across generations. From a libertarian viewpoint, property rights are essential. The right to transfer property after death is often seen as an extension of these rights. However, libertarian beliefs about inheritance tax are not uniform. Some libertarians argue that taxing inheritances is an unfair expropriation that violates the rights of the deceased. They believe ownership rights should continue beyond death. Others feel that since moral property rights arise from an individual's labor during their lifetime, these rights end at death. Therefore, they argue that the state can justifiably regulate or tax property transfers after death. Interestingly, some libertarian scholars see practical reasons for inheritance taxation that align with classical liberal values. These reasons include curbing inherited political power and preventing wealthy families from shielding their members from market competition. This can help ensure equal opportunities for all. The debate within libertarianism also highlights differences between right libertarian views, which typically defend strong property rights including bequests, and left libertarian views, which question the moral basis of an absolute right to bequeath. Historically, inheritance taxes have also been influenced by policy changes in response to economic conditions. For example, some regions introduced or raised estate taxes during wars or economic downturns to boost revenue. In contrast, other areas reduced or eliminated these taxes, sometimes replacing them with capital gains taxes applied at death. This reflects shifting priorities in tax policy. In practical terms, inheritance tax affects how wealth is passed down through generations. It can also influence social mobility and economic inequality. From a libertarian perspective, any form of taxation, including inheritance tax, needs careful examination regarding its impact on individual freedom and property rights. This must be balanced against concerns about market fairness and political equality. The history of inheritance tax is closely linked to changing ideas about property, government authority, and social justice. While libertarianism traditionally emphasizes strong property rights, there is an ongoing discussion about the legitimacy and role of inheritance taxation in a framework that values both individual freedom and fair market competition.